Welcome, everybody. This is Market Peak with Seth and Matt, and it is Friday, February 26th, and we got a lot to talk about. First, hit that subscribe button, please. If you're already subscribed, hit the like button, and we'd really appreciate it. So we got a lot to cover today. We're going to be talking about GME. We're talking about trucks. We're going to talk about GME and AMC. There's your C. It was a very interesting couple days. Markets took a little bit of a dive this week, and it looks like the VIX had a little bit of a bounce. So Matt's going to have his three charts. And before we really get started, of course, we're not financial advisors. None of this is advice. Definitely consult a professional, do your own research, all that stuff. So we're going to go ahead and start with the portfolio update here, which we have in front of you. So interestingly enough, so if you look at what I have here, I still have the two calls I got a week or two ago. But yeah, I went in with GameStop, and it's kind of funny because if you remember, Matthew, I got in about $70 and ended up selling it around like 150, 160, bought back in at like 142, something like that. Was able to gain some shares. So even though it's dipped quite a bit, I'm actually at a break even. And if you consider the fact that if I would have kept all my, I actually had Palantir, that dropped by like 25%. I had QS, which is QuantumScape. And if you actually look at this one, I sold it Thursday morning to buy it, and it had just gone up at like $65. Or $65, ended up dropping to 54 by the end of the week. So if you factor in the fact that if I hadn't sold to buy GameStop, I'd probably be down by like 20% in this particular one. So even though it's been crazy, even though it's dropped, even though a lot of people are really upset, I'm actually at a break even from where I was, but a lot higher than where I would have been had I not gotten, myself wrapped up in all this GameStop debauchery. So we're actually going to be talking about GameStop a little bit shortly. And then we want to talk about shrimp, because this is one of our favorites. It's been one of our favorites for the longest time. Reason I want to bring it up is because if you actually look at all the craziness that happened this week, I mean, SHMP, natural shrimp, it was about 70 cents, dipped down really low when a lot of the other Russell 2000s dipped, a lot of the micro caps. But for the most part, it was pretty flat for the week, even though everything was so crazy. Been talking about how stable it is, how much we love it. Got a lot of great things going on. Matthew and I have been pretty excited about it for the longest time. It just keeps going up, and it found support here. I feel like with all this new stuff they have being released, it's only going to go up from there. And then last thing is Watt. Reason I'm bringing them up is because they had their earnings, and they ended up doing okay, but they did report a loss of $7.5 million and 15 cents a share. But they did also talk about two partnerships. We're going to be covering Watt extensively, or more extensively, on Sunday's edition or Sunday show. So I'm not going to go into it too much, but it dipped quite a bit. And if you actually look at the 5-day from where it was about 620, 629. Now it's at 435. I just think it's a really, really good time to jump in. It's right at support level if you can actually look across here. So, I mean, it's right there. So Monday morning, one of the moves I'm going to be making for sure. So that's what I got. Did you follow the GameStop thing as heavily as I did? I literally watched GameStop and AMC all day from 9 a.m. till the bell in front of my computer, with like two different shows. I was rotating back and forth and stuff.
No, I don't have a trade.
I got you.
In GameStop or AMC right now.
I got you.
They're a little too volatile for my taste.
You're smart move. Nothing wrong with that. That's for sure. The only reason
Yep. My guess is, since we've already had that spike in GME,
yep,
that will probably level off a little bit. Let that IV come off.
Yep.
And we'll see what happens. We'll see if we get one more good squeeze. I'm sure we will. Short interest is still high as a percentage of the float. So true.
I don't know. It's just, it's one of the, I mean, like I said, I watched it, and towards the end of each day, it was like just amazing watching the battles that went on with like just trying to get this to close above 100, trying to get AMC to close above $8. It was just amazing to watch because
Yeah. So when something randomly closes above or below a big even number right as the market is closing,
yep,
that means that the market makers are trying to basically close that share price below or above a popular strike price.
yes,
So in layman's terms, what that means is they know that they've sold a lot of options contracts at a certain strike price, meaning they don't want it to actually hit that strike price.
yeah,
So what they're going to do, the dealers, is make sure that that strike price doesn't get reached
sure,
by the time those contracts expire. But the Highwire Act is making sure that they're stringing along the people who bought those contracts.
yeah. Oh,
So
they
they're
do.
going to
Oh, yeah.
give you a fake out. They're going to
it's
spike you a little bit. They're going to keep you as close as possible to that strike price heading into that expiration, so that you think in your head the best idea in this case is to hold.
sure.
What you don't realize is they're going to press a button at 359 and drop the share price a few cents below that strike price. So meaning that if you didn't sell and take your profit, you just expired worthless.
Bye-bye. And that's exactly what happened with AMC. I mean, the last 5 minutes, I mean, it took massive, not massive, but pretty big amounts of volume, and it dipped down to like 786. And then in the last 4 minutes, it closed out at 801. It's just,
And
dude, it's
small
just
cap stocks like that are just too easy to manipulate.
Sure.
When you have, say you've got 152 million shares
Sure.
being traded on average, right? You're not going to, like Apple, you're not going to be able to manipulate
no. It's
that stock
of
price.
course.
But if you're only trading, if your trading volume is like, I don't know, like below 1 million,
Sure.
watch out.
Yeah. I mean,
Watch out.
it's just like I watched it. I watched everything happen. It was like get it above 100, and of course, GameStop finished it at 101.33. It was just amazing to watch the battle. Now, there are people who think that this victory translates into the stock possibly, both of them possibly going up next Monday and Tuesday for whatever reason, and if not, maybe even beyond. How, like, I don't know. How could that possibly translate? I just don't get it.
So what a lot of GME watchers are anticipating is another squeeze heading into, in this case, quarterly expiry.
Sure.
So the third Friday of every month is when a lot of your options contracts expire.
I got
Most big money investors buy monthly contracts.
Sure.
Right? They don't mess around with the weekly or the bi-weekly contracts. That's just too volatile for them because they have fiduciary responsibility. They've got investors that they have to look out for.
It's probably good advice.
Have a certain risk tolerance.
Stay away from those weekly. Yeah. I mean, sure.
Yeah. So what's happening right now is a lot of people are anticipating history repeating itself.
Sure.
Right? We had a great short squeeze before off a similar setup. My personal opinion, however, is that whereas we might get another squeeze, it's probably not going to be as big as the last one.
No.
If there's one good rule of thumb when trading, it's that you typically only get one good chance to profit off of an asymmetric trade.
Sure.
You might get a second chance, but it's not going to be as profitable as that first time.
Yep.
Because that first time that something goes, rockets higher or dips when no one expects it.
No one has defense for it.
Exactly. No one's prepared for it. Meaning you're going to get a wider strength, you know. So, I mean, a lot of people are set up, anticipating, expecting, predicting a massive short squeeze in the coming weeks.
Like coming weeks, though, because the last one, it was like, here's the thing. It's the same cycle. Friday, yada, 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 we win. Monday, Tuesday comes the squeeze. That's actually, I think it was Monday when I texted you. I was like, look at GameStop. What's going on here? Then the next day, I'm like, dude, GameStop. And then I finally figured out what's going on. Wednesday, I think, is when it hit like 500 or pretty close to 500 before it dipped. And it just seems like everyone thinks like the same cycle is going to kind of repeat itself, I think. I don't know. But even if it gets to 200 or 300 or 200.
Yeah.
We'll see. Like I said, I'm break even right now, so it's either up or down. I might just wait for the Monday morning push and cash out and put it all into Watt. I think that's probably good advice.
I think that's a prudent move. So GME is just too hot right now.
Sure.
It's really hot. A lot of people are overly bullish.
Of course.
And that's just a setup for failure.
I hear you. I hear you.
You know?
I hear you. All right. Well, let's see what else we got here. ChargePoint. Moving on from GME and AMC. I almost said GMC again. Jesus, it should start. Maybe they could be a sponsor. So ChargePoint and Switchback, they were two companies. Basically, Switchback is acquiring them to bring them in, SPAC. And so the two of them are converging. It's going to be a new ticker, CHPT, actually starting on Monday. So, all right. So if we look at the actual month, it's just, it's gone from a high of 43 down to like 30. In the last 5 days, it went from 37. Now it's actually at 30. So it took a really big dive today. I'm not really sure why. It was at 1.33, dove down to like 28 before settling at 30. But anyway, pretty soon it's going to be a brand new ticker. I don't know if they're going to would they keep the same price? I wonder how that works.
That's a good question.
I guess we'll find out. CHPT, folks. So, and then inflation was another thing that we want to talk about. What you got, Matt?
Yeah, so we had a bit of a sell-off this week. It's being blamed on inflation fears, which is ridiculous considering inflation fears have been omnipresent over the past 2 to 3 years.
Sure.
So inflation refers to an increase in price for goods and services. Now, that increase in price could be brought on by a constraint on supply, right? Or it could have something to do with monetary inflation. The currency you use to buy your goods and services, in this case, the dollar in the United States, loses its buying power. So what's happening right now is you're seeing the treasury market start to price in an economic recovery. And to put that in layman's terms, what that means is people are buying less treasuries because they want to buy stocks where you get more yield. They're looking at the stock market and they're saying a lot of these companies are going to do well. We're going to recover. I need to be in the stock market where I can get 20%.
Some of them have already recovered.
Annually. Yeah. And treasuries, I mean, you're going to lose money over time with inflation.
Sure.
Right? Because interest rates right now, I think they
can only go up, right?
1.4. Yeah, 140 basis points. Yeah. So you're getting a little more coupon on your 10-year treasury right now as compared to like a month ago.
Yes.
Yeah. The problem is the 10-year yield, the coupon, the interest you get on that 10-year treasury has backed off so rapidly over the past 2 weeks in particular that you have a lot of algorithmic traders looking at those rates and seeing that volatility and selling stocks into that.
Sure.
So in other words, basically what you had was a rate scare this week. We had, I think the 10-year Treasury jumped about 40 basis points, and that scared some people.
Sure.
Right? That's a sudden, very sudden
You think
rise.
that led to the rise in the VIX this week?
I
Or
actually
part
don't.
of it? Okay.
I think what led to the VIX rising was the VIX just being at support.
Yeah.
Um,
It needed a little
but
bump, it needed to shake
correlation.
things up. It had been like so flat for so long.
Yeah. So when you think about it, when everyone's super bullish and on one side of the boat, that's just a ripe setup.
Yeah.
Yeah.
I hear you.
For a little bit of a correction.
For sure.
That's how you have to think of the market. That's the perspective you need to protect yourself.
Yeah.
You got to think about what the big money players are doing.
Sure.
They have insider information. They have more money, more leverage than you. They have more influence. They can manipulate the market. You got to stay ahead of that.
Yeah.
My rule of thumb is that whenever it feels really, really, really wrong, it's typically right.
Yeah. It's funny to say that because one of the things you said, if you watch the news and they say, oh, the GameStop thing is over and it's not going to last long, you tend to think the opposite. And that's exactly what they've been saying already since 4 o'clock this afternoon or whatever. And
really quickly.
Yep.
So the bottom line on inflation fears right now is that, in my opinion, inflation is good for the stock market right now.
Sure.
Because it's flushing people out of the treasury market, out of bonds, and into stocks where they're going to get a higher yield.
Sure.
What confuses me right now is gold's reaction. So commodities, oil, gold are traded in dollars.
Yep.
When the 10-year rate backs off a little bit, that means that the dollar's worth a little bit less. It's harder to sell dollars, T-bills. And normally that's bullish for commodities because commodities are traded in dollar. When the dollar loses its buying power, it means you can afford more commodities.
Yep.
So you have oil rallying, you have gold still consolidating, and yet you have U.S. Treasury 10-year rates backing off. It's very confusing.
Sure.
There are a lot of mixed signals out there in the market right now. And if you're buying options right now, which a lot of people are, I would say extend to a more long-dated position because the next month or two might be very volatile.
Okay. That's not really what we want to hear, but, okay. We'll take it. That's fine. Yeah, gold. Wow. I'm looking at one of the charts that you oftentimes use.
GLD?
Oh, yeah, dude. It wasn't like a big drop per se, but for something as stable as gold, it's a bit of a drop. There's no doubt about that.
Yeah. And the question is gold telling us something? Is it sending a signal? I'm personally bullish on the market.
Well, when gold drops, it's usually because stocks are going up. It's been a little bit different right now. It's been
a little different right now.
It's really hard.
I think investors are trying to feel out the bond market and decide whether or not they need to allocate into some sort of safety trade.
Sure.
Which would be bonds or treasuries.
Sure.
The Federal Reserve would also benefit from a big 10-year treasury sale. Because right now they're having to buy a lot of treasuries.
Yep.
And TIPS bonds, which are break-even bonds. So I know that they would benefit from a big 10-year sale.
Sure.
The question is, how do you facilitate that? And my guess is the easiest way would be to drop the market a little bit, which would force a lot of money managers into that risk parity safety trade and force them to buy treasuries.
Sure.
Which would mean the Federal Reserve would not have to raise rates, right? And that's the big thing. The Federal Reserve is worried right now because eventually we're going to have a full-scale recovery. The stock market is going to be at all-time highs again, and they're going to have to raise rates because if you don't raise rates, you're not going to be able to sell your 10-year treasury, which you need to fund your deficit.
Sure.
Right. And the reason rates are going up right now is because you have a shortage of buyers, meaning you have to offer a higher interest rate or a coupon on the bond that you're selling, in this case, the treasury. Right. So we're going to see what happens. But my guess is that the Federal Reserve right now is a little enticed to let the market drop a little bit so that they can have
some room,
a good 10-year and 30-year treasury sale. Yeah,
that makes sense.
But at the same time, I'm pretty sure they're going to try and avoid some sort of correction.
Yeah.
Right. If we drop, say for instance, we drop 10 to 20% over the next couple months, say in my opinion, sometime over the summer, buy that.
Yeah.
Back up the truck and buy that.
Yeah.
Because the Federal Reserve, once they sell all those treasuries, once they have a very successful treasury auction, that'll last
Buy
them for
the
a while.
dips, folks. Buy the dips.
They're going to step on the pedal. They're going to send the market flying. Right?
I believe it. Well, we'll see. We'll see what happens over the next 3 or 4 or 5 months. I feel like this little correction, it's been a little mini sink. I mean, the whole thing went down for quite some time, but I feel like it's not going to last. Maybe like another week, and then things will start to settle out. In my personal opinion.
All that's happening is you're getting rotation into different sectors.
Sure.
Right? The NASDAQ goes down, small caps go up. Small caps go down, the NASDAQ goes up. Treasury yields go up, stock market goes up, treasury yields go down. I mean, it's just
sure.
The money is going to find its way
cyclical
around the market. Yeah,
for sure.
Cyclicals are doing well right now. Cyclicals tend to thrive in a high interest rate environment. Growth stocks, tech stocks tend to be a little more rate sensitive, but at the same time, in my opinion, these growthy tech stocks are the wave of the future, and you should be getting in now because they are displacing so many traditional business models.
Yeah,
right now.
That's true.
It's just disrupting everything.
Not to mention creating whole new, I guess, enterprises, such as AITX, for instance. Nice little segue there, right?
They're making their own businesses.
Yeah.
They're
in a, like robot security. It just, it's one of those things that really kind of is just starting to emerge. And
they're creating their own demand.
Yeah, that's true too.
That's how you start a trend. That's how you change the world.
So let's look at AITX. So this was our pick last week, and it was one of the ones that we decided we wanted to feature. And just because they have a really good, compelling story, they make great products. They're still in the early stages. The stock is very affordable, and we like to review the stocks. And we actually had a pretty good run for a while. The ones we picked were up like, anywhere like legit from like 10 to 20, some even popping up to 50%. This one was not, this one didn't, I want to say suffer the same fate, but didn't have the same benefit. It was about 18 cents at the beginning of the week, 17, 18 cents, finished at 13, 14. So, it had about a 20% drop, but what didn't? One of the things, it's just micro caps got crushed, Blue Sphere got crushed. It's just one of those things where, but I'm going to go back to SHMP once again. Or is it up here? Oh, here. I guess I'll just use this one. Once again, this one didn't really have that much of an effect as far as how the stock reacted. It was pretty flat all the way across the board. Really important. Once again, in love with this stock, SHMP. But if you look at AITX and you actually, take a look at its trajectory, take a look at our review last week. What I really love about the company is, once again, the CEO is just, he's all over not all over the place, but he does a lot of promotions. He tweets a lot. He puts a lot of headlines out there and pictures and stuff like that. So he's very, very active, charismatic guy, just one of those guys you will kind of, listen to. He's a good salesman. So I really expected to do well. I would call it a dip. It dipped down to about 9 cents when everything else dipped. In fact, if we looked at shrimp, shrimp did the exact same thing. So it's not a terrible situation that it dipped. Everything else did at the same time. But there again, I highly suggest take a look at it. So it wasn't great, Can't hit him out of the park every time. But it's
here's what I'll say about shrimp and AITX.
Sure.
So when you have a micro cap, small cap stock not move in tandem with the market, so if the market drops 20% and those stocks don't do anything,
sure,
that means that not many people are invested.
Okay.
Which means that you should get in.
Okay.
Sure. That's what that tells me.
I mean, SHMP is like 70, 60, 70 cents, depending. It's super early, and they are just about to like push this thing out and this technology out into the world. We did a review of them. I think it was a couple weeks ago. You can take a look at the title. It's just a really, really good one. But
potential 10-bagger easily.
Oh,
AITX,
for sure.
Who knows how high that goes?
This isn't official advice. We're just two guys talking here. Do your research. But I mean, even AITX. But I think shrimp has more trajectory now. AITX already has products out. It's a really, really tough sell. I really think they can do it. I think they're going to keep penetrating like they are. But who fucking I'm sorry, we try to keep this clean, but who fucking doesn't like shrimp? Like, seriously. Seriously. And if you look at our review, we import 90% of our seafood, and half of that 90% is farmed. And what natural shrimp is doing is just, you got to watch review.
Cutting out the middleman.
Yeah, it's amazing what they're doing. It's like I said, 65, 70 cents. I have 10,000 shares. I've been buying like 2,000 shares, just adding on like every week. So hopefully GME, if I can get a little bit more of a pop, I'll, put some money into. You can't get it on Robinhood, folks. Same thing with AITX. But those of you should, if you're really into investing, I love Robinhood. It's so easy. But if you want to get into some of these higher risk stocks, you're gonna have to get something else. All right, so let's move into everyone's favorite segment. 3 charts with Matt. So
3 charts with Matt.
We're gonna go ahead.
All right, let's start out with the Vix.
Start with Vix. So that's pretty much his go-to, and it's a good. I'm gonna pull out I'll pull out the month. Yeah. Pull out the month here. So go for it.
So every time we have a spike, it gets crushed. It gets sold down. I don't expect anything to be different moving forward. We had a bounce off support that 20-ish level. We're having a hard time spiking below it. I'm confident we will eventually. I did say about 3 or 4 days ago that I was anticipating the VIX going up before it goes back down.
Yeah, bounce for sure you did. Yep.
That happened, and we will see. My prediction is that the VIX continues to downtrend going into quarterly expiry in late March. And the VIX spiking doesn't help anyone.
No.
There's
a quick spike right on. I even said it. I was like, do you think that the VIX and the GME, had something to do with each other? And sure enough, the same day. Just coincidence. Just saying.
It's probably not coincidence,
okay,
though. Let's be honest.
Okay.
There are so many different ways you can optimize a trade.
Sure.
If you have the leverage to do it, if you're if say you're a hedge fund and you have a relationship with other hedge funds and you coordinate together, there are so many different mechanisms for different levers for you to use in order to get a desired outcome.
Sure.
That the average retail trader doesn't have a chance.
Yeah.
Remember that stock prices are driven by psychology, meaning that when you think you know something is about to happen, other people are thinking about that.
Or thinking the opposite.
Know what you're thinking.
Yeah.
And know how to shake you out.
That GME AMC, like above 100, above 8, is just a prime example. And they
manipulation.
At its finest. At its finest. All right. So you're expecting it to kind of, because it seems to have, it actually went down today. So you're expecting it to kind of keep dwindling down?
I actually expected a steeper cool off today.
Sure.
We got maybe 3 to 4%.
Yeah.
Down on the VIX.
3.25.
So that kind of makes me think that we may have another spike.
Okay.
But again, my gut instinct tells me that over the next few months, the VIX is just going to get crushed to death, and we're going to set a new all-time low.
We like it.
That's my prediction.
We like it. Yeah, man. We'll take it.
I'll give myself a little longer than the next few months. I think the VIX over the next year will post new all-time low.
All right,
get down to that $8-9 level.
TLT.
TLT. All right, so we talked about inflation. The TLT is the 20-year U.S. Treasury ETF. It's a pretty good VIX proxy, in my opinion.
143.12 today.
Yeah. So normally it moves in tandem with the VIX. It's been doing some funny things recently, going off on its own. We are right now in that support band, that 138, 140 level. I would anticipate some sort of bounce. Treasury, 10-year Treasury yields backed off significantly this week, but then had a bit of a bounce. And I would expect the TLT to do the same thing. So if you look at a monthly in the money strike price on the TLT right now, implied volatility is below 15%, which means not a lot of people are interested in that trade. Not a lot of people are long bonds right now, which tells me that someone is going to see an opportunity and step on the other side of that trade. It's all about Treasury. It's all about bonds right now. Can the Fed sell debt, and how can they manipulate the market to sell debt without having to crash the market?
Sure.
Right.
That's the balance.
People criticize the Fed and, think that they can, offer sideline commentary. The people who run the Federal Reserve have PhDs in economics.
Yeah.
They know what they're doing.
And they've worked for the banks, or Wall Street.
Yeah. Like their sole job is to prevent the United States from bringing down the global economy. I don't think you could find a better group of people to keep you safe.
Yeah, for sure. All right. So last one is going to be IWM.
IWM, small caps. The only point I had to make here is that the IWM right now is still holding support. It's still sky high. It's still outperforming to the upside. I would anticipate some sort of fake out rotation out of small caps into growth.
Sure.
Especially if we get a VIX spike. But the IWM right now is on fire.
It is on fire. It is.
High yield debt on fire.
Lately, the last month it's been doing what didn't? It definitely had a rough week.
But who would have thought small caps would have outperformed the way they did?
That's true. Very, very true.
Banks and energy, banks and oil companies got destroyed last year. But look at them now.
Yeah. The oil companies are definitely making a bit of a comeback.
Yeah.
That's
Watch
for sure.
the IWM. Watch the IWM to know whether or not there's a risk on or risk off sentiment driving prices. IWM is full of smaller companies, mostly domestic companies that may be more of a gamble. So if the IWM is rising, that means there's a risk on sentiment. That means big money investors are comfortable with the market. They're going to dive into those riskier stocks in search of yield. If the IWM pulls back before the other indices, that typically means that people are rotating out. Big money players are rotating out of small caps, out of risk, because they know that the market's going to have a little bit of a dip.
Sure. I don't know. We'll see. We'll see if the dip continues. I feel like Mondays, unless something happens, unless they like pass the relief bill over the weekend or something crazy like that.
We normally rally on Monday. Wednesdays are normally good. Friday can be a little bit of a bitch, but I think Friday.
You sound like a Madonna song.
Yeah.
Just another manic Monday.
Just
all right, so we gotta wrap this up. We normally do our predictions, but we'll be doing our predictions for Monday on our Sunday show in a couple days. So, any last minute thoughts?
I'm hoping for a rally next week.
Yeah, we're all hoping for a rally. It was a rough one. So, all right, we'll see you guys in a couple days. Boom.